subprime lending and mortgage fraud has been rampant in Canada's housing market. And what sort of problems will this cause ahead? That's what we're going to dig into in today's video. So I want to take you to this, and I've referred to this many times in different videos, and I'll leave a link in the description. So this is about the foreclosure crisis in the US, and this was a report that was put out in 2015. They studied a lot of the foreclosures that happened, and basically what they came to realize was, as you can see on this chart, that prime mortgages were actually contributing more to what happened with the housing bust than subprime, as you can see from here. And FHA/VA loans, that's basically your subsidized insured loans, like the CMHC insured loans essentially, and then VA is Veterans Association. So anyway, you got subprime mortgage, prime mortgage. You can see how the foreclosures for prime mortgages absolutely skyrocketed, and really this was the main component of the housing market bust, which is what you would really expect. And, you know, that goes against the narrative of the mainstream media and even Hollywood, which portrayed it as a subprime event. They said, you know, it's even today, most people think it was the subprime mortgages that caused the 2008 financial crisis. That was definitely a massive component to it. But there was a load of people with good credit who essentially contributed even more to the housing market bust, which is exactly what you see in Canada. So it's not necessarily those subprime people that are going to be the ones that are defaulting and getting foreclosed on, like many people think. It can be the ones who have good credit scores. So if we look now and see what else they say here, it's just really interesting. I'm just going to read this real quick and then we'll move on to see all the different types of subprime mortgages in Canada. So many studies of the housing market collapse of the last decade and the associated sharp rise in defaults and foreclosures focus on the role of the subprime mortgage sector. Yet subprime loans comprise of a relatively small share of the US housing market, usually about 15% and never more than 21%. Many studies also focus on the period leading up to 2008, even though most foreclosures occurred subsequently. A new look at the US foreclosure crisis panel data evidence of prime and subprime borrowers from 1997 to 2012 is what they reference. And I'd highly recommend that you dig through this, and I'll leave a link in the description, as I said. And now there is a big component of subprime to Canada's housing market as well, which people don't really think about. So one is you can get a 0% down mortgage. Yeah, I'm not kidding you. You can get a 0% borrowed down payment mortgage in Canada. And, you know, there's private mortgage insurers like Canada Guarantee. We're going through some of their products, but they cause massive moral hazard in lending. Just think about it, because you're essentially having this company, you're a lender, you have this company insure the loans that you sell. Are you really going to care about the quality of the loans that you're selling? Or are you just going to care about meeting the requirements of the mortgage insurer? That's all you're going to care about. And if the person is blatantly lying, are you going to care about that? No. And that's the same thing with the CMHC. If the person is ticking all the boxes, you know, even if they've had the funds in the account just more than 90 days, they're not going to ask where that comes from. And, you know, there is a massive amount of lending to new immigrants as well that goes on, which is all subprime. It's all subprime lending. And it's just unbelievable that these loans actually exist, but they do. And this says it's for people with a strong credit history. But the thing is, if you're putting zero down, I mean, that's a subprime loan. Even if you have strong credit history, it doesn't matter, because we just went through that NBER report, because the prime borrower, they contributed a lot to what happened in the 2008 financial crisis. And then this is another one of their products. And you know what a lot of people don't realize as well is Canada Guarantee is essentially Ontario Teachers' pension plan. They bought this from AIG, proudly going since 2010. It says right there in the top left-hand corner here. But essentially, this is the Ontario Teachers' pension plan, which is just crazy. You know, pension plans have been pushed so far out on the risk curve because of low interest rate policy. I mean, they took this over in 2010 or whatever. So where were interest rates in 2010? They were rock bottom, and pension funds, desperate for yields, were looking at more risky products so they could get higher yields, things like mortgage insurance. So that's what happened. So this says Canada guarantees Maple Leaf Advantage provides new immigrants who have limited documented credit history the opportunity to purchase a home with as little as 5% down. You know, for me, I think things like this should be banned. They should be illegal. You shouldn't be able to have these private mortgage insurers, and you shouldn't even be able to have government mortgage insurance. It should all be gone. I mean, the narrative is that these things are helping people get into the housing market and everything like that. And that is not true, because they come at a cost down the road, which people are going to have to pay. I mean, even with the example of like Canada Guarantee, for example, you know, if they have a significant loss or whatever, do you not think the Ontario government is going to come in and bail them out? Same with the CMHC. You know, if the CMHC gets into trouble, it's the government, so they're going to get bailed out. So it comes at a massive cost to me and to you also. It's just that people don't realize it. And this is the crazy thing, because you're talking about huge amounts of money here in Canada, because homes are very expensive. They're much more expensive than they ever got in the US in 2008. So the financial risk there it's cataclysmic. It's absolutely massive. So it cannot be understated. But people think, oh yeah, these programs, they're going to help new immigrants get into the housing market. Those immigrants are subprime. They shouldn't be able to get mortgages. You know, in my opinion, they should just have rules that say essentially you cannot get a mortgage in Canada with unless you're a Canadian citizen. That's what really they should start doing, and maybe they'll start doing that down the road. And not only that, that will provide some sort of incentive for people to go and get the citizenship, because there's been massive drop-offs in that. I don't know if you've heard that in the news as well. So it's quite interesting, but they should not be lending to people on work permits. I mean, they'll give a 30-year mortgage to somebody who's on a 2-year work permit. I'm not kidding. I'm not kidding, guys. This is just the insanity, a moral hazard that has been caused in the lending industry in Canada. Here's another one. It's called the Low Doc Advantage. Every one of these programs, they're an advantage. Everything's an advantage, right? It's no advantage. It's just a massive cost to you and I. Little do we realize, and this private mortgage insurance industry is the subprime underbelly of the housing market that nobody talks about. It's the elephant in the room. And then on top of that, you've got the fraud, the rampant fraud that has really just been increasing and increasing and increasing. And that's what you see. That's kind of a natural cycle of a bubble, essentially. You see the fraud just increase. You know, people think, for example, putting 5% down on a house, saying it's your principal residence when it's not, it's an investment property. They think that's okay. Most people think that's okay, that you can go and do that. It's just a white lie. But then how does that affect the bank's balance sheet? Because now they're looking at that saying, okay, this loan, it's actually a low risk loan. So we'll go package that with a bunch of low risk loans and send those to the bank, when actually it's a high risk loan. But high risk to who? Because CMHC insurance, if they're getting CMHC insurance, who is funding that? It's the taxpayer. The reality is, at the end of the day, when this all goes bust and it all goes bad, the taxpayer isn't going to be able to cover the losses on everything. The banks are going to have to foot a massive portion of the bill, which will lead to a massive credit tightening, which people just don't understand. I mean, we saw that in the UK, where I'm from, for instance. It's been very difficult to get a mortgage. Now, things have improved since then, but for many years, I'm talking like 10 years after 2008, it was incredibly difficult to get a mortgage because of what happened. And the banks got bailouts still. There was still massive QE. In fact, interest rates were held lower in England for a long time, but people don't realize that. So if you look at a chart of household debt, this is what's happened. And you can see that since around 2003, 2004 area, is when this just started to skyrocket. It went really up after 2008. You can see that there. And, you know, this is when they should have reined it in, but they didn't. They continued to let it just go higher and higher and higher. And it's gone past what people would have even thought was possible, you know, 108% of GDP. And as you can see, there's a peak on that chart. And if you head over to the United States household debt to GDP, if you look back to 2008, you can see there that it peaked. You had that peak exactly similar to what happened in Canada, and it peaked around 100%. If we go back to Canada, we're above 100%. And that goes with the amount of debt that is outstanding in Canada is just it's at unbelievable levels right now. The amount of debt corporations are holding on to, and that's going to cause massive layoffs that people don't understand why people are going to start getting laid off. It's just private businesses have a lot of debt on their balance sheet. So if interest rates are higher, guess what? They're going to have to cut costs. And the biggest cost to most corporations, to most businesses, is their payroll costs. So they have to start cutting people, and that leads to more people unemployed. That leads to more people forced to sell the home, because the home is really the last thing. And we're already starting to see the defaults occurring in other areas. The banks, the credit reporting agencies are all worried. Even we see the Bank of Canada, but they're all just... I think they know what's going on. It's just nobody wants to accept the blame, because this is a society that we live in this woke society that we live in, is essentially just nobody will take the blame for anything, you know, and it's just absolutely no responsibility. There's just zero responsibility, zero accountability. And it's crazy. It drives me. You know, both the Conservatives, the Liberals, the NDP, they all played a part in this. It cannot be ignored. So, you know, and it's just going to be a disaster when this blows, as it was in 2008, but even more extreme. So, yeah, you can see what happened after household debt peaked in the United States, and you can see clearly that there is a peak there in Canada. So that is not a good sign of what's to come. And when you compare Canada to the rest of the world in terms of household debt to GDP, it's the fourth highest in the world, which is just, it's unbelievable. It really is. You know, and the insane amount of debt held by households, that's going to be crazy when it all blows, which it is starting to blow. And Australia, you can see, is number 2. Australia doesn't have as much private debt as Canada does, and that's one advantage Australia has. But Australia has a massive housing bubble too, massive household debt, so they're in trouble as well. They got even over 108%. You can see it's 112%. South Korea, Switzerland on there. I'm not too sure. I haven't looked into those markets, so I can't really comment on those. I know that Hong Kong's in a bubble. People have said it on this channel, Netherlands real estate has gone absolutely parabolic. And you've also got Hong Kong there, which has been in a bubble and I believe has started to go down, the housing market, since everything that's been happening with the Chinese government, obviously. So it's really, really interesting. We'll continue to monitor this and see what goes on. If you've enjoyed this video, you might like that video there. You might also like this video there. And I want to thank you so much for watching. Sign up to my free email list in just the description. I'll see you in the next